Hi, this is Craig, the options linebacker. This is the weekend report for Monday, September 6th, Labor Day. Before we talk about what the price has done this past week, I'd like to take you back a week ago to see if you can recall how you were feeling on last weekend as you were looking at the price chart of the S&P 500. The price had come right back down here to support, and let me tell you, everybody was bearish. You could not get away from the bad news. It was everywhere, whether or not it was through the mainstream media, picking up newspapers, watching TV. All the national news stories would lead with a story of Wall Street with the background with the New York Stock Exchange. And anytime you see that and the amount of negativity that was in the media, you have to wonder whether or not you've already seen the worst of it. That's what we kind of talked about last weekend as we said, okay, this is a good start, but this is the kind of thing that it's going to have to do. We talked about how it's going to have to break out above this descending channel. It was going to have to take out eventually the prior swing high at 1100. And guess what? It did both of those things as the S&P was rallying about 6.2% over the course of about 4 days. Pretty impressive performance. This is the type of pattern that I call the slam dance because it sort of represents what people are doing on the dance floor as they're just jumping up and down at this point. And if you're trying to hold a position, whether or not you're trying to go short down here, you got stopped out more than once perhaps. If you were trying to go long off the bottom and said, okay, this is a nice looking bottoming candle, you also got stopped out. Nobody survives these kind of moves. And when everybody gets shaken off, this is where the chart starts to really move. So let's zoom out to the weekly chart for some perspective. It looks like after a 5-wave series to the upside, again, this is very elementary Elliott wave. I'm not going to get into the deep stuff, mostly because I don't know it. I keep to the simple basics of the Elliott wave, and that's good enough for me. So after this 5-wave series to the upside, we've had an ABC correction. At least one interpretation is that of an ABC correction. So perhaps this move off the bottom that we've had since the beginning of July was the first wave up. It certainly wasn't very impressive and actually a double top there. So that left us in a condition where the weekly chart and as well as the monthly chart were extremely vulnerable to a very quick rip, probably down here to the 61.8% retracement of this whole move, which was right around S&P 870. And when you factor that in with all the negativity that we've had over the last few weeks, it's not hard to see that everybody thought we were heading lower. But again, when everybody thinks the same thing, chances are pretty good that you're not going to see that. You'll see quite the opposite, in fact. So if this is wave 1 and we had wave 2 as a pullback here, perhaps then we're in the midst of wave 3 to the upside on the weekly chart. This could be an extremely powerful wave, similar to this one that we had last year. So let's see what it would take for this to materialize as a wave 3 to the upside, or is this just one last fake out before the trapdoor opens and we do in fact head down to this level here. Now, markets are fractal as we go back to the daily chart here. What I talked about earlier was saying that this potentially was the wave 1 higher on the weekly chart. And when I say fractal, that means that the wave one entire wave on the weekly chart is comprised of 5 separate waves on the daily chart. You can see these here. So 1, 2, 3, 4, 5, and then that was enough. And then you could say that we've had an ABC correction from there, and perhaps we're on wave 1 up now of the daily chart. What's going to have to happen for this to turn into a full weekly wave 3? And we'll put a question mark here because we're not sure yet. Well, the first thing that needed to happen has already happened. We did take out the prior swing high. So if we count this as a swing high here at 1100, the price went below here, tried to go up, and tumbled very quickly from there. So this is a good sign that we've already blown out the prior swing high. The next thing that has to happen here, and this is unlikely because we do have this trend line above here, but again, if you listen to my premium newsletter, you'd learn that we haven't had a whole lot of respect for trend lines lately. The price certainly has not really cared about upper trend lines. But what has to happen next to get this chart to go higher is we need some bad news, believe it or not. We need the chart to retrace, and this is where I've thrown these fibs here, 38%, 50%, and 61.8%. We need some bad news to come into the market. We need everybody to say, see, I told you so. I told you that this was just a fake out. And what we need is for the bears to hop back onto this chart in droves and try to drive this thing down. What will happen is at some point, we'll find that point here, perhaps down in this level, where the longer term bulls are ready to buy yet again. They perhaps drove it up to begin with, they missed the move, and the rest of them are ready to go and say thank you very much for driving it down here so we could get the shares at a bargain. This higher low is so necessary, and we see that again and again and again, and this is what happens when you get too much fear, too many weak hand bears jumping on board and trying to drive this lower, and they all have to cover. And that's where the daily wave 3 comes in. So if this is going to turn into a weekly wave 3, we need a whole 5-wave series on the daily chart for that to occur. So after that occurs, the next thing that's got to punch through is S&P 1130, and then it can start working on the higher targets. So right now, in the next couple of weeks, we need to see, and this is probably going to happen within a few days actually, we need to see that higher low show up, and then after that it's got to punch through 1130. If we don't get, first of all, the higher low, if it just turns into one of these moves, say goodnight. If on wave 3 we don't get through 1130, that may be good night as well too. We may see just a very weak series up here and then good night. So let's not get married to one position or another. Let's diagram out what's going to happen to the charts for it to be either bullish or bearish, and then react accordingly. Now I'm going to keep my analysis of the charts to that for right now because it's that important, but I'll leave you with one thought. Just like football season is starting up now, which is my favorite season of the year, especially college football, this is one of the busiest times of the year for the market. This is when the most volume we normally see is through the end of the third and into the fourth quarter. Now we've seen these charts coiling up literally for weeks, if not months, and we know that when charts coil up like that, they're getting ready to make a pretty big move. Don't know which way it's going to go so far. The bulls have the early edge right now, but we'll see what happens in the next week or two. So get your game on, sharpen your saw, and get ready for this end of the year because I think we'll get a big, big move out of this. So that's it from the locker room, folks. Have a great weekend, the rest of what's left of Labor Day here, and we'll see you next weekend. Take care.